The U.S. hit $1 trillion in credit card debt for the first time ever.
The nation's record high credit card debt now stands at nearly $988 billion. That's around $5,700 per person.
Increased consumer spending, which powers a lot of economic growth, more card usage because cash is less and less of a thing with each passing year.
High interest rates and inflation are adding to the problem.
What is happening, everyone? Hope you're having a great day. Wanted to jump on here and talk a little bit about debt consolidation. I saw a report a few days ago in regards to consumer credit card debt. It's pretty staggering, guys, and it's not heading in the right direction at all. And obviously, with pretty much the savings being depleted, anybody that had any savings, that saved up during COVID, all of that, for the most part, has been depleted. So with higher cost, people don't have a choice, but they are moving to credit cards in order to take care of these high costs. And with that being said, literally year over year, well, actually in the last quarter, $54 billion in new credit card debt. It has ballooned to over $1.05 trillion and $154 billion year over year, which is the largest increase since 1999. That is absolutely massive. People are turning to credit card debt, and your credit cards are typically the highest interest rate. It's the most expensive way to borrow money. And I know a lot of people's like, well, I got a really low interest rate on my house loan, and at least I've got a low interest rate on my car, but your credit cards are literally chewing away at any type of wealth that you may have accumulated. It's going to eat up. If you make the minimum payment on that credit card, you'll never pay that thing off. It'll take you 25 to 30 years to do so. So why am I bringing this up? Well, right now, even though credit card debt is at a high level, we have an enormous amount of equity as a country collectively. Somewhere in the ballpark of $16 trillion of equity, and basically about $10 trillion that is available, or equates to the tune of about $200,000 per home. Now, obviously, those that just bought a house in the last couple years are probably not going to have that much equity. But those of you that you've been living in your homes for a while probably have some good equity. And if you have credit card debt, this might be the time that you want to sit down with a mortgage advisor, sit down with a financial advisor and talk about what are the options in order to save money. Guys, because literally if you're making a minimum credit card payment, you will never pay the loan off. And it may be okay now for you to just make that minimum payment, but as time goes on, you are literally eroding your spending power over time. And with inflation being where it's at, and obviously pay is not increasing as quickly as cost of living and all the other things that are going on around us, you have to mitigate that as much as possible. And so how can you do that? There's equity in your property. You can take advantage of that either through a debt consolidation loan. So in other words, you'll do a cash out refinance, pay off your first mortgage, pay off your credit card debts, pay off all the debts that you can pay off, save yourself $500, $600, $700 a month in your payments. And even though you may be going on a higher interest rate, you can take that $600 or $700 and begin to apply that and chunk that down on your mortgage to pay it off quicker. So there are a lot of different ways to kind of package and figure out a way that you can mitigate your debt load. Because guys, it's not getting any better and it's going to continue to balloon. So if you have credit card debt, I want you to really think about what are some of the ways that you can possibly get that taken care of and paid off, so that you don't put yourself in a situation where you're never going to get out. There's no light at the end of the tunnel, so to speak. Obviously, cashing out on the equity of your home can be used for more than just debt consolidation. It can be used for home improvements. It can be used for student loans, college debt, different types of things. But your equity in your home, even with rates where they're at, is still going to be cheaper, the cheapest money that you can borrow versus some sort of a credit card of sorts. So it's definitely something to consider, but I wanted to share that with you. When I saw those numbers, I thought, man, this is staggering. This is we are at an apex right now, and it's not getting any better. With costs going up and rising, people are turning to credit cards, and those credit cards have an interest rate of 20, 25, 30%. And man, that is an expensive way to borrow money, especially if you have strong equity in your home where you can maybe take care of some of that, pay that off, save yourself some money. You know, back in the day in 1997, when I first got into this business, we would do a lot of those where we would literally show people how they could save $400, $500, $600, $800 a month, and then instruct and show those people how they can take that money, because you're already spending that money anyway. You're already paying your bills anyway. Maybe you're used to that payment right now, and it's not putting a ton of pressure on your family, or maybe it is. Maybe that extra $600 or $800 a month that you could save on your monthly outgo take a tremendous weight off of your shoulders. But let's say you're comfortable with making that payment. You could literally take that $600, $700, $800 and chunk away at the end the principal balance of your mortgage and have that thing paid off in a whole lot less years than 30. Be able to maybe pay it off in 10 or 15 years, depending on what you'd be willing to throw at the principal balance. And again, there's formulas and there's calculators to figure all of that out. So I recommend highly that you sit down with a mortgage advisor. You can give me a call. We can talk about your situation. Maybe sit down with a financial planner, talk about these things, talk about your finances. I know sometimes it can be embarrassing. In the past, I've had situations that I want to talk about, but at the end of the day, bring it out, talk to somebody, talk to a professional that can take a 500 feet overview and look at your finances and say, here's a couple paths that can get you to the end of that tunnel where there's light, and be able to, hopefully save you thousands of dollars, if not hundreds of thousands of dollars in interest. Because again, going down the route of credit cards is not a good thing. At $1.05 trillion consumer debt, credit card debt, wow, that is absolutely astronomical, and literally the fastest growth year over year since 1999. That is crazy to even look and think about. But we're at a great opportunity where we have more equity than we've ever had. And so if you've got equity in your home, you can take advantage of that. Again, sit down with an advisor. There's no obligation. Try to figure out if there's a plan or a way to, and bring it out, talk about it, right? It's the only way you're ever gonna know if you can actually change your situation, save some money, save some interest, and save spending your hard-earned money going to the banks and going to the credit card companies, and it's like a revolving door. That's why they call it revolving credit. It's literally a revolving door where you're never gonna get out. It's literally just spinning around and around, and there's no end to it. And they literally show you, if you amortize a minimum credit card, call it a $2,000, $3,000, $4,000, $5,000 credit card, you make the minimum payment, you will not pay that thing off for literally, that's assuming you never charge on it again, pay it off in 25 to 30 years. And if you charge on it, it's going to be even longer. So with that being said, I hope it's been helpful to you. Sit down with a mortgage advisor, sit down with a financial planner, figure out ways that you can potentially better your situation, better your future. Because if you are sitting on equity, there's a good reason to begin to look and see how maybe that equity can help you in your current situation. So that being said, talk to you later. Bye for now.